Hello, everyone. Welcome to the Safe House. I'm Jeff Edwards, co founder of Safe House Initiative, and your host for today's podcast. Enjoy. Our guest today is going to explore with us. He's a brilliant thought leader. Kurt Suhs, founder and CEO of Concierge Cyber, is joining us today. Hey, Kurt, welcome to the Safe House.
Hey, Jeff. Great to be with everyone today.
Yeah. Hey, since it's your first time on the Safe House, why don't you introduce yourself and kind of walk us through the journey that's taking you to where you are today?
Sure. Yeah, Kurt Suhs. I'm the CEO of Concierge Cyber based here in Atlanta, Georgia. 40 years of experience. Started my career in commercial banking, hopped over to the bank regulatory side as an investigator with FDIC. That's where I first saw my experience with insurance, where we dealt with the failed financial institutions and we looked at the commercial insurance policies as sources of recovery in terms of restoring the bank insurance fund. And I did that for several years. I also managed a financial crimes unit in the Northeast and had the opportunity to see the first online bank as a regulator.
Hmm.
And we were looking really at safety soundness issues, Jeff, back in the day, and the use of this new technology back in the mid 90s. From there, I met an insurance agent here in Atlanta that was trying to place coverage for this online only bank, and that was basically the pathway to leaving FDIC and joining the first organization that's created the first cyber insurance policy back in 1997. And
Hmm.
from there, I went to Ace Insurance, which is now Chubb. Spent several years there as a professional liability underwriting manager, and went from there to Ironshore Insurance from 2010 to 18. We were bought by Liberty Mutual, and that's when I wanted to provide a solution for small and medium-sized businesses that don't buy standalone cyber, an offering, and that's where Plan B, like roadside assistance, you still value your auto insurance. And that's where I really got the idea for creating Concierge Cyber. And we've been around coming up almost 8 years now.
That's quite a journey. I mean, your breadth of experience, and from the early days, the primordial days of cyber insurance, you've been there.
Sure have. Yeah, it's been a really interesting experience because, I explained to my son, for example, who's 20, that back in the 80s, we had terminals, we had secretaries with typewriters and bag phones. And boy, Jeff, as you've seen, the technology has just continued to just exponentially change the way businesses work. And so even in the 90s, where the dot coms were just coming into the landscape and technology changing to where we are today, it's really remarkable.
Yeah, it really has been. You and I have had lived those days together or separately, but yeah, during that time frame.
Mhm.
So let me ask you a question. We've had several guests on to talk about this very subject of the low take-up rate for standalone cyber policies for small, mid-sized businesses. And why is that?
Yeah, there's a few different factors, right? So the policies today they become so broad, right? And cheaper because there's a lot of capital in the market space. So
Hmm.
why wouldn't an organization buy? Well, first you're looking at a 50 to a 75 page policy
Yeah.
with everything from not just security and privacy liability and the data breach expenses, but insurers are offering PBX phone fraud and social engineering and property tangible loss, and they've just added so much that it's a very confusing product or insurance policy, and every insurance company has their own form with their own
Mm.
language. So that number one, the educational hurdle of getting over what does all this insurance contract do for me as a small business. Secondly, the challenge too is just in terms of, well, if I don't have an online presence, why do I need this, right?
Yeah.
And explaining that with theft of monies, and even things such as doxing and uh, yeah, libel slander, and other types of things that could impact maybe a restaurant where someone's posting, misleading or deceptive pictures that
Mm.
aren't yours. So anyway, so it gets back to the threat landscape. How does that impact me? A small
Mhm.
organization may not think, oh, we'll never be a target. Secondly, it's working with your insurance agent who doesn't have the expertise and then has to go to a
Mm.
specialty lines wholesaler broker who then may go to the market and get, five different quotes with five policies that are all different. They're all between 50 and 75 pages and then having that person explain it to the retail agent to the buyer. That gets to a communication, educational issue, and yeah, and so there's just a lot of factors as to why an organization may decide, well, it's never going to happen to us. We'll just pass and move forward. And really, the statistic, Jeff, is under $100 million in revenue, annual revenue,
Mhm.
only 2 out of 10 organizations
Mm.
in the United States buy a standalone policy.
That's incredible. So the reason they have such a broad number of things in the policy is that because the cyber originator spawned out of the property casualty side of the house, and it just kind of that legacy carryover. Is that what happened with that?
Yeah, the genesis was it started off a technology error and omission or a tech E&O
Yeah.
platform. And that broadened into the privacy liability, the security liability. It was really just the liability piece. And then there was back in the day, Cigna offered the first party coverage, which is really the data restoration, the business interruption, and extra expense. That was around 97. Then around 2010, you had markets, well, they offered the breach expenses, which are the cost for the outside law firm to look at what the insured has to do from regulatory and uh, practical matters in terms of notifying customers, notifying regulators, and so forth. Also, the forensics. Then identity credit monitoring was added into the coverage, as was
Mm.
crisis management. So, the policy started getting broader. Then around 2015, we started seeing markets expand further with, oh, well, we need new coverage because crime policies that provide coverage for theft of monies don't provide this new exposure called social engineering or business email compromise. So they
Hmm.
looked at the cyber underwriters, Jeff, to provide a new add-on for these cyber policies. Really, one of the drivers was that the crime underwriters wanted to have a callback requirement for wire
Mm.
transfers, and because several brokers didn't like the restrictions, they went to the cyber underwriters who really don't have a crime background, and they added this on. So in the marketplace today, where we are, because of the enormous amount of capital being put into the cyber insurance space, uh, there's a broadening of coverage and softening of the rates until things change. And particularly, what's interesting today, though, is you have ransomware and the wire fraud or the business email compromise still impacting organizations regardless of industry, regardless of size. But interestingly, it's still driving down pricing, and that's just really
Mm.
unusual in this space.
So when you, so what are you seeing in general when somebody doesn't have a small mid-sized business doesn't have a cyber policy? What is it that they are left with in terms of offsetting or transferring risk, which insurance is known for? What do they do? Just curious.
They just don't know. I could tell you honestly, even those that buy don't know what to do. If you
Uh-huh.
don't print your policy out, Jeff, and you have a ransomware attack and you can't access your computer, then you end up calling your broker and who serves as your outside risk manager, unlike a large organization that has in-house risk management departments. The small and medium-sized businesses don't have that. They may have a CFO, a treasurer,
Mm.
the CEO, but they really don't have a dedicated insurance. And that's where they look and partner with their insurance agent to serve that role. Now, like I said, a lot of those agents that serve the middle and smaller market don't have that specialty lines expertise. And when I look at cyber today, you can make the argument that potentially you can potentially have recoveries in almost every property casualty policy. And what I mean by that is, say you have a theft a wire fraud or a theft of money.
Yep.
And you don't have a standalone cyber. Well, you want to look at your business owner's policy, your BOP. Maybe you buy a crime policy. Maybe you buy a kidnap ransom policy. Maybe you have an error and omission policy. And so you want to look at all those policies to see sources of recovery. The other thing a company doesn't have expertise or resources is an in-house counsel. And so they may seek, call their outside counsel because it could look, Jeff, as to, contract terms and conditions. What does your contract with the third party say for indemnification, hold harmless, protection and confidentiality of information? So you certainly, you have a lot of different things playing at the same time. And again, if you don't have a standalone cyber, again, who are you going to call? Who are you going to have the expertise? And that's really a huge gap.
We said something interesting. Even the people who have a cyber policy don't know what to do. You've come across that,
Right.
obviously.
Yeah, all the time. And we help a lot of organizations. For example, right now, over the past month, we've had 3 organizations that are members, Concierge Cyber members, where they have a standalone cyber insurance policy. They've experienced a cyber attack that impacted a business interruption. And while the policy first comes into play with the data breach attorney to look at, okay, let's see cause of loss. Let's bring in the forensics partner from the insurance company's panel. They're looking at cause of loss, but in the meantime, the organization's losing hundreds of thousands, if not millions of dollars a week. And so, we try to motivate and educate our client in terms of, hey, has anyone talked to you about doing the proof of loss? You need to bring in a forensics accounting firm. Now, the insurance company may have their own forensics accounting firm come in, but if there's a big difference in the calculation, we've often seen the insureds retain a forensics accounting firm, and in one case, the difference between the calculation, Jeff, was like $700,000. And so what do you do? Because the data breach attorney isn't a coverage attorney. They're not going to try to tell you how to maximize your insurance policy. They're simply there under the terms of the cyber insurance contract to provide you expertise and guidance on what to do from regulatory notification, things of that nature. So we're there to help, even when they have standalone cyber, to make sure that there's a source of recovery. In this one particular case with the engineering firm, that's a class of business whose contracts really in that industry have project delay provisions, where if the engineering firm has a delay, you're penalized. Well, this client lost about 6 to 7 contracts with one of their biggest vendors because they couldn't place the work with them because they were under the cyber attack. And so this Lloyd's carrier, the standalone policy, had an endorsement for reputational harm and loss relating to that. And so we tendered a claim to the Lloyd's syndicate that here, we had an additional $400,000 to $500,000 loss relating to reputational for lost business. So, and again, that was something that wasn't discussed with the insured from their broker or anyone else working on the claim.
You said that cyber spawned from E&O. So do most small businesses have an E&O policy, standalone policy, or just a separate, or as a rider to their property casualty policy? Just curious.
Really depends on the class of business. In the law profession, most law firms, majority have lawyers' professional liability policies, so the malpractice policies. Interestingly, there are some E&O policies for lawyers that include cyber coverage. Not everything as a standalone, but enough that it could potentially, as cat coverage, erode their liability coverage for the law firm. We saw the same thing with architects, engineers, where some of the syndicates added the cyber into the E&O for the architects, engineers. That
Mm-hmm.
many markets have kind of gone away from that because, again, cyber being cat coverage.
Mm-hmm.
In terms of the number of organizations that buy, it's really a lot of times contract driven. And as a small company, you're kind of beholden to those large organizations that require it. So I'd say, 60%, maybe more, have standalone E&O policies in the small and SMB space.
So for the audience here, what I'm hearing, see if I get this right. If you don't have a cyber policy, then you should look at the rest of the other insurance policies you may have available to you to see what is covered. Is that a good assessment?
Yeah, yeah, 100% agree.
And what about these, I guess, MGAs that are, these organizations that offer, preemptive or some monitoring and some technology wed with some kind of an insurance policy for cyber. What is your opinion of those, and how are they going to evolve? Just curious.
Yeah, so we started to see the emergence of these MGUs and insurtechs around 2016, 17.
Hmm.
And they basically came to the market saying, hey, we're a tech company. We're going to do the active monitoring, and we're also going to do the back end forensics, right? And so
Hmm.
they've grown to do the front end, the back end, and the risk transfer.
Hmm.
And I've always been concerned about that approach because if you're certainly looking at the front end and you miss something, then how, number one, can you do the forensics when you're actively managing and monitoring the insured's network, and then do the forensics on an objective basis, and then do the risk transfer? It's almost like you have to do one or the other. And the other thing too is, as we've seen, is just because you're doing all the monitoring. Again, if your organization opts in to do the monitoring and things, because again, the insurtechs will offer these services, but again, the take up rate is really probably not even close to 85%, right? Because again, these organizations, these insureds, don't even read their policies,
Hmm.
um, and don't even look at the notice page, the policyholder notice, at the very end of the policy that says, "Oh, log into this portal with these credentials and create your new identifier." Um, a lot of organizations don't even get to that point. So now there could be monetary incentives to do these things. But again, if I'm a small organization and you're monitoring my website, what's that telling the insurer? Because everything else I have is in the cloud. You can't even see it. So yeah, man, you can monitor my website all day, but if I don't have an email server, you may be able to see it's at GoDaddy, but that's as far as you'll see. And going back to all the other applications, it's really invisible to the InsurTech and the MGU. So, I say with a couple things is, yeah, I mean, technology and solutions are always good. I'm a proponent of that. But
Hmm.
again, for a small business, and it's almost the same on an enterprise scale, is when you looked at Target, the attackers came in through a HVAC contractor, family business, who had
Hmm.
authorized access. So when you look at the supply chain of any organization, the big enterprise, Jeff, as you know, you can't even get your arms around the number of supply chain vendors in their network. But for a small organization, again, it's everything's outsourced to a third party. If that third party vendor has an incident,
Hmm.
how are you going to manage that? So, I think, again, I look at this is cyber is not a technology solution. It's really, it's really it's a theft of data, right? It gets back to it's almost a crime policy on
Hmm.
steroids.
Hmm. Yeah. So, yeah, you're talking about technology. So it's a technology solution, but there's some people that are to say, I don't have a cyber policy. I just use technology to prevent. And I kind of look at them and go, you can't really prevent somebody who really wants to get into your organization, some form or fashion. They're going to penetrate and get inside. That's my view. Any thoughts on that,
Yeah,
Kurt?
and it goes even really simply, Jeff, too, of do you have a privacy policy in your website? right?
Mm,
So, I mean, I can't tell you how many small businesses just don't even have a privacy policy. That's a problem. That's an issue, especially, federal, not to say necessarily that the Federal Trade Commission or the state is going to come after you, but if I'm plaintiff's attorney, I'm going to look at everything you did or didn't from a fiduciary manner. So the first thing I'm going to look at in litigation is, show me what you did, even if you decided to self-insure or to not purchase certain technologies. Show me that you evaluated and you made a conscious business person's decision not to do XYZ. That's, I think, defensible. But if you don't have any documentation to even show that, that could be problematic in terms of a negligence claim.
so when you meet someone for the first time, they say, "Hey, Kurt, would you come over here? I want to talk to you because I got a problem.
Mhm.
I don't have a cyber policy, but just kind of walk me through how we should think about and work through this. Could you give us kind of a walkthrough example of what that could look like? Because you did talk about various things you would do to take a look at things. You got the privacy policy, you got the various insurance policies that could exist. I mean, there's all these things. What is that kind of that step process you kind of walk somebody through and say, here's how we should probably think about it?
Yeah,
We care
and
to
I
share
think the
that?
market,
Yeah.
I, I think the market's looking at this in a wrong way. And that's my
Hmm.
personal opinion.
Okay.
Because the market is trying to underwrite based on a threat landscape. And I can tell from my regulatory days working with FBI and so forth that you're always going to be behind the bad guy. The bad guys are
Mhm.
always going to be ahead of the curve. And so if you're going to try to use technology as a proactive measure, um, again, I just don't think it's going to be successful. The way
Mhm.
I look at an organization is by the loss exposure basis.
Hmm.
And what I mean by that is insurance underwriters look at the exposure basis of what you're insuring. So, for example, a crime policy, the exposure basis is money, theft of money.
Mhm.
Um, the property policies, it's okay, how many buildings do you have? What are they made out of? And
Mhm.
so where are they located? When you look at workers' compensation, that's on the type of office position. Is it clerical? Is it manufacturing in
Mhm.
in the shop or whatever? So when you look at cyber, though, what's unique is there are a lot of different exposure bases. So from the top down, I would ask a client, number one is for the first party is, okay, um, do you have a law firm relationship where that lawyer has expertise in doing data breaches, data breach litigation and defense?
Mhm.
Okay. If they don't, the benefit of having that is working with or even with a forensics partner. Do you have an outside firm, not the IT security consultant, but do you have a firm that specializes in forensics? Because the data breach expense, the importance is the attorney hires the forensics company
Mhm.
to maintain attorney-client privilege. So that's really important to understand. So, secondly, how much income do you have per year? And that's important because, as I mentioned, Jeff, cyber was born out of technology, error, and emissions insurance, which is rated on annual revenue. Well, interestingly, cyber is rated on annual revenue as well as your industry class, um, as well as the uh, how large of an organization you are and type of business. So, um, but in terms of paying out a claim, cyber is based on the business interruption and extra expense is based on income. So
Mhm.
if you're an organization that doesn't have any income, you have no recoverable source of insurance for cyber. So again, looking at okay, business interruption and extra expenses based on income. What's your income over the 12 months? If you were to lose that, what would that look like? Okay. Then you look at data restoration. Okay. So backups and things that were important. But what's the value, the total insured value of your computer equipment, right? Because if you have to replace equipment that's been ransomed and encrypted, and now it's a paperweight, and you have to go buy new equipment, what
Mhm.
would that value be? So looking at the total insured value of your computer equipment. Now, the thing that insurance companies aren't thinking about is if you've got a loan with a bank or credit union securing that computer equipment, they've got the first dibs. as collateral. And if you have to buy new equipment, that check from the cyber insurance is going to go right to the bank to pay off the loan. So anyways, getting back to the physical damage, the total insured value. So that takes pretty much of the first party. Then the second side of that coin, Jeff, is the liability. So how much data do you have? If you don't have any data or personal information or whatever that is, then what company has that? If it's outsourced. And then the question is, okay, let's look at the contract with that third party vendor and what do they do for indemnification, hold harmless, limitations of liability. Secondly, as part of that, and I put security in there the same place. So the more data you have, the potential bigger liability. If you don't have it in-house, it's with a third party, look at the contract. Do you get certificates of insurance? So if you have vendors that have all your data or maybe doing backups, do you get certificates of insurance that they have cyber or E&O? We had a case where we had a member in a ransomware attack. They said, well, all our data is backed up by a third-party managed service provider. And unfortunately, as the client found out, that third party never backed up in 5 years, even though they were paying several $100,000 a year to do that. Now they have litigation potential claim against that company. And unfortunately, they never asked whether they had any insurance, for error omission, really techie, or even cyber. So again, you can't go back at this point because now they're lowering up. So anyway, so looking at that for the liability, the security, and then I talked about the business email compromise, the theft of money. How much money do you wire? If you don't wire anything, then you really don't have exposure. I mean, certainly you have invoices and things of that nature, but what's the average invoice amount, right? And do you have callback provisions if someone has requests a banking change? So looking at all those policies. So that goes back to a scan in itself, looking at vulnerabilities won't tell you any of this stuff, right? And unfortunately, the applications, they may ask about the data you have and things like that, but the number of records, but they're not going to really ask, they don't even ask about how much income you have, right? Which is incredible because they're offering coverage without even understanding the exposure basis. So they're basically working in the dark. So those are some key points we look at, looking at the exposure basis that go and mirror inside a cyber policy.
It's a great way to look at it, Kurt. And I've not had this kind of a conversation on our podcast in the last 2.5 years. So you really bring a great deal of clarity to things. So let me ask you a question. If our audience had one thing that they could do today to really improve their overall risk management or their position, what would that one thing be that they could do?
We are seeing a huge gap with your domain, your DNS security. And so I think there was a recent dark reading report showing that 90% of businesses, or rather organizations, fail and don't have the basic DNS settings in place. And really, the importance of that is if you don't have it in place, the threat actors who can also see you don't have it in place can then actually take your DNS, your domain, and send an email actually as you to another employee that's going to come through, or to a trusted third-party vendor. You have a link, they open the link, and next thing you're ransomwared, right? So it's such a basic, easy fix. And unfortunately, we're seeing 90% of our organizations that we have on board, 60% of which have standalone cyber, fail our email scans.
Wow. Well, I'll tell you what, Kurt, what a pleasure to talk with you. And we'd love to have you come back because there's a bunch of more things we can definitely talk about if you're willing to do so.
Yeah, all the time. I love what we do. We just feel it's a collaborative process where we just want to help organizations understand risk. I mean, and you don't have to transfer risk per se, but certainly you should evaluate have a good understanding, and have a plan, right? Because oftentimes we see organizations, it'll never happen to us, and it may never
Yeah.
happen to you, but it could certainly happen to a supply chain partner, and you're impacted by that.
Yeah. Yeah. Well, thank you ever so much on behalf of our audience and the Safe House Initiative. Thank you. And we'd love to have you come back.
Thanks, Jeff. I appreciate the opportunity, and yeah, I appreciate everyone hearing in today.
That's our episode. We greatly appreciate you joining us and hope it was a wonderful learning experience. I'm your host, Jeff Edwards, and remember, be safe, be resilient, and be kind to each other. For more educational materials, please visit us at safehouseinitiative.org. All materials are free from tracking, promotions, memberships, or fees of any kind. Safe House Initiative is an all-volunteer organization.